So, a little bit about me. Taught at UCM, teach at Texarkana. I'm mostly financial reporting, but I find ethics cases very interesting. And I think we're in kind of a place where we can talk about it. Now, of course, since Sarbanes-Oxley came about, we haven't had any ethical problems. Everything's been great. There are no frauds, right? There's nothing going on, nothing to see here. And so, of course, the laughter was appreciated. I was a little mad because Obama stole my opening. I was all set to lose yourself in the moment, but I figured I'd start with a joke. These are just headlines that I grabbed. I didn't want to talk about a particular case or a particular person here because I never know who I'm going to bump into. And also, just so you know, though I publish in ethics and I know accounting ethics, I am by no means an ethics lawyer or what I would call an ethics professional. I think that's another level. Every time I study ethics or I publish a case, I feel like there's a whole world out there that I could learn more. And I'm going to talk about frauds today as kind of failures in ethics because there's not really a good measure for failing in ethics because ethics is so much more than the law. I'm just saying you've gone on the wrong side of the law. There are a lot of ethical decisions that are kind of unethical, but are still legal. The one way we can talk about is using fraud as kind of a proxy to see how things have changed either since Sarbanes-Oxley or how things have changed since the 2009 financial crisis. So all these are 20-something big frauds that happened. Some of them are Europe, but I feel like our accounting and accounting in Europe is similar enough and connected enough where a lot of these companies and auditors work together. So that's kind of why I put them up there. And you can see that there's no shortage of frauds, financial scandals, and in any particular year, you run into hundreds of them, thousands of them. And one of the things that these show is that they're big dollars, and there's still people losing billions of dollars out there. And hopefully, if we can tighten our ethics up, tighten our controls up, then we can improve this situation. And I want this to kind of be a conversation. I have some poll everywhere questions throughout this, and I would appreciate it if you had your cell phone, if you could, when we get there, take it out, scan it, and give me some feedback. And we'll also talk about some cases. Now, I talked to Bob, and I know some of you, there's no guarantee that this sort of becomes CPE, but I know states and CE credits and things like that vary. So if you need anything from me, and you think you might be able to send it to your governing body and get credit, please let me know. If they insist that you have some sort of quiz afterwards or follow up on that, I can also set something up on the website for you. So just want to let you know that I'm going to be flexible there. Just having a conversation, and it kind of struck my mind. I'm from a small town, and this just happened. Bookkeeper arrested for alleged $700K embezzlement. And this was one of our students back 12 years ago, so way before any of the current faculty were there. But you just never know what's going to happen. And so one of the things I certainly ask is, when we get there, what can we do better as educators? And I know you've probably introduced yourself a bunch, so I won't ask that, but I will ask a question. How many of you are in private industry? Okay, and then public accounting or consulting? Okay, all right. Any faculty? Any not-for-profit? Okay. I think I got everybody except for you. Yep.
Private.
Private, okay, all right. So, I mean, these things happen everywhere. So we'll talk about, hopefully, all the cases and kind of related to what's going on with you guys. I feel like ethical accounting matters now more than ever because the dollars and the internet connect us, and when you're cheating somebody, it's very easy to get huge dollars quickly. And you know, I just think about what's kind of going on with stocks and the way that they've recently been able to kind of manipulate stocks. And while it looks like the little guys are getting the bad guys, it's been interesting to see them shorting and holding up stocks, AMC, GameStop, and so it's really interesting. I think this field is worth spending time for, but I also think when you look at fraud and when you look at ethical issues now, we're also looking at crypto and stock manipulation, that things that we didn't talk about as much before we were just kind of worried about, are we reporting properly? Are we properly representing the company in financial statements? So when I talk about fraud, I'm trying to stick to just the accounting types of fraud, because if you look at it and you search for fraud or you search for ethical issues, crypto's really thrown a huge monkey wrench into things, and there's a lot of stealing of crypto that has pushed this total fraud number up, but I'm focused mostly on SEC companies. So our agenda today, introduction. I'll briefly talk a little bit about the accounting ethical environment, enforcement actions, recognizing and avoiding ethical dilemmas in cases and discussions. And I'll be honest with you, I know that professionals in the field, you kind of know your ethics area probably better than I do. If you belong to a professional group, the AICPA, the IMA, I'm assuming certified fraud examiners also have a code of conduct that includes ethics. So you probably know your area in particular better than me. If I say something that's wrong, please raise a hand and correct me. I want this to be kind of an open discussion. I want you guys to enjoy the day, learn a little bit, but think about ethics. Okay, so this is the first poll that I have. You can either scan it if you can get the video, or you can text or go to poll everywhere. I tried to set it up so that it did not ask you any personal information about yourself. If I failed, I apologize. This is the first time I've used this, but I really want to use it again. And so the question to answer is, you know, what words come to mind when you think about ethics in accounting? So the larger the word, the more often you've used it. I appreciate that. These are all things that we strive for, right? Honesty, integrity. Oh, I see an Enron in there. That's not the right one. Nobody's supposed to remind us about our past. But, you know, these are things that we need. And you say, well, okay, why do we need these? Because professional ethics is at the heart of everything that we do. We saw there Enron, and not to pick on Arthur Anderson, but they were the last one to go, right? And they had several ethical issues. And really what happened with them, even though they might have been able to fight off the one charge from the DOJ, there was a run on their credibility, and the company couldn't audit anymore. It didn't have the reputation. And if you think about what separates us, what gives us the credibility as money managers, as the people that are going to tell it to you straight independently, it's all because of what we've done and built our reputation. And you'll see later kind of where we stand in the public's eyes. And of course, this comes directly from the AICPA website. People need to trust us because we're handling their money, we're handling their organization, we're handling finances within the organization, the treasury operations, and so it is valuable to us. So one of the things that I was going to talk to one of you about before we started here, and some of you may remember, some of you may not have been in the field at the time, was early 2000s, late 1990s, there was this huge ethical problem. And if you were in the field, you could probably cite 5 or 6 major fraud cases that were somewhere nearly $90 billion. So you think about WorldCom, Enron, I think it was Sunbeam was one of them. What's that?
The Sunbeam, I can't forget that one.
Right, so I mean, companies that you wouldn't necessarily think of. And then there's some that are still kind of hidden, even though they were massive frauds. Like, does anybody think about AOL, Time Warner during that time? No, they lost nearly $100 billion in stock value and just got kind of pushed aside through all of this. So there's so much going on. And while Anderson took the brunt of the criticism, the reality was that it probably could have happened to any of the big 5 at the time. Legal and regulatory requirements completely changed. Up until Sarbanes-Oxley in that era, who were we responsible to? Well, not really before Sarbanes-Oxley. I mean, they could get us, but we were kind of set to do our own thing, right? We mostly had the ability to govern ourselves. And Sarbanes-Oxley took that away, right? They said, nope, you can't do it. You burned us big. How important is the financial market? It's impossible to state, right? I mean, we have companies that are too big to fail. Arguably, our big 4 accounting firms are too big to fail now. And you'll see a little bit later, they're not doing so great on audits. We talked about these frauds and or the ones that I showed early on, but on audits that they're doing, they're finding from the PCAOB considerable amount of deficiencies. So we've got to think about how we improve that as well. And the legal and regulatory environment from Sarbanes-Oxley changed. It made us a little more accountable, but it also made CFOs and CEOs more accountable. I heard somebody talking about skilling and FastOut, and I got a chance to see FastOut, one of the IMA things, a few years ago. And really, I kind of wanted to boo him because he came up and he had his CFO of the Year trophy for 1 year, and then he had his prison number for the next year. And he's kind of telling us basically that what he was doing got him all kinds of recognition 1 year, and then the next year got him thrown in jail as though it was some sort of excuse that what he was doing wasn't wrong. Well, when you back things up with your stock on a downturn for a company that's been doing some really unethical, fraudulent things, chances are when you get caught, that stock's going to be worthless, and all those special purpose entities that you backed up disappear, and you owe lots of money off balance sheet. But not to mention how they hurt people just in some of the things that they did. Did anybody hear about the rolling blackouts in California? No. And since the regulatory environment had changed, a lot of regulations were being cut. They were able to shut down power plants in California during busy times of the year. And so what does that happen? That creates scarcity. And of course, if you just think about supply and demand, price goes way up. Now, there used to be regulations that prevented them from shutting down and prevented them from charging too much, everywhere but Texas, right? So when they did this, they made tons of money, and it was all good fun for them. So you can see we're not doing great, but our professional reputation is still good. When we look at this, we're still doing reporting for thousands of companies, big companies, and there's a lot of good that goes on every day. Where do you think accountants fall on the trust scale?
Well, definitely D.
It's always safe to take shots at politicians, right?
Yeah.
As long as I don't mention which one. All right, good number of responses, I appreciate it. We're number one, 15%. We're pretty close to judges without the cool robes. And we're better than lawyers, right? So technically there's more than one correct answer here, right? If you get the higher one, you're good. So let's talk about, this is a Gallup poll, and it's from 2022, and some things happened since 2022. But their 2024 didn't ask about accountants. The closest thing they said to accountants was bankers. But you can see, actually, we've done great. We still have a very good reputation where, if you look at accountants, 41% say high or very high, although that's probably down from 70%, you know, pre all these frauds that went on, and then the 2008 financial crisis. We're right next to judges, which is pretty good. And what I like to see is that not so many people are hating on us, right? These are, we're terrible, or we're low or very low, right? So, I mean, we've got 9% here, but everybody else is saying that we're doing pretty well. So overall, this is very positive. I think related to the 2024 poll, they had bankers on there, and the bankers, everybody on this chart kind of dropped a little bit, but they kept a very similar place. So if they had something on accountants, I would say it'd be right in a similar area. But overall, all of our organizations, all of our politicians have slipped a little bit in terms of ratings on honesty and ethics. Do you feel like this is pretty reasonable given what's gone on in our industry? Yeah, I mean, we've had some challenges, but overall, we're trying to do the right thing. We're reporting it most of the time, self-reporting, although there's been some of that hasn't taken place. Saw out there the SEC find some investment firms and investment banking firms and management firms nearly $400 million. And it was because of this background type of chat that goes on. So I heard somebody say that they now have a work phone and a personal phone. Because it seems like, and I don't know if businesses are doing it to protect themselves, but it seems like the conversations that were going on in the background at these investment firms got them in real trouble because they were using text messaging. And the SEC hasn't stopped on it. It was there, I think they're up to close to $1 billion in fines chasing around these things. So this is in progress.
So the SEC collects $400 million. It's hurt my 401k. How do I get that money? Where's that $400 million go?
All right, so I don't have 100% of the answer for you for that, and that's a really good question if anybody knows. I do know that the SEC has paid out a considerable amount of money to whistleblowers lately, and that's actually, I think, one of the routes that we can talk to our students about and tell them about the SEC paying out whistleblower fines. And I forget the number, but it can be billions of dollars. If you whistleblow on a company that's got billions of dollars in fines, your potential to get that, if what you said was truthful, is huge. You actually can earn billions of dollars by being an honest whistleblower. Now, the other thing I think that might happen, and I'm not sure, but I would guess some of that money would go back to the people that lost it. But if you talk to most of the people that have lost money in those frauds, they go, bankruptcy court. I don't know that it's connected with the SEC fines, but that's a great question.
So on this issue in particular, and I work for a bank that we now have I have an app on my phone called Global Relay that we're supposed to use when we're communicating, because the big thing was that with text, you can't capture that. There's no capture of the data. But who's losing money there? I mean, I think that's the hard part that you get to, is that you're doing having these conversations around with clients or about clients, but it's not like it's a specific fraud per se. It's not illegal activity. It's just not that you're able to keep track of it from a compliance standpoint. So
yeah, it's not necessarily that they're actually doing something that's not right. I didn't
Correct.
see anything that was indicating that they were essentially telling people pre-market information,
yeah,
or anything like that. I have not delved in beyond what you said, but you're right that it's just, this is the compliance, these are the controls that we're supposed to have, and we don't have those controls in place. And we talked a little bit about self-reporting. There were 3 companies that reported on themselves and turned over their stuff, and their fines were much lower than the other. I think it was 26 firms now altogether.
it is still ongoing.
Yeah, oh yeah, it's, like I said, it's until they get things right on that controls base. But that also leads me to the fact that if they're looking at these things, they may come up with some other issues, but as of right now, it's not that they committed fraud, it's just that they weren't following accounting records, or weren't properly storing their records. So I feel like the accounting ethical environment is constantly evolving. Technology is probably the biggest factor in that right now. You've got so much that people can do. I mean, we have somebody who, in error, lost billions of dollars in trading for large banks. How does that happen, right? It's because the technology moves so quickly and people want to try to take advantage of it, but not everything is in place, the fail safes and things like that. Our controls aren't there to prevent these types of things. And so, you know, that person at least got into chasing a loss, right? I don't know if I heard a little bit of going gambling after some accounting meetings, and they tell you what, don't chase a loss, right? Well, that's what this person got into, and it should have been something that stopped that and prevented that from happening. We have a complex system of regulations. I mentioned accounting. AICPA has a code, the IMA, they're both leaders in this, and they can enforce their code. Now, that doesn't necessarily put you in jail, but you cannot be a CPA or a CMA anymore if you break the ethics rules. Now, what has become though is that the SEC is a much more empowered body since Sarbanes-Oxley, and so they can now also do much more than they could before. Before, executives could throw up their hands and say, I'm not an accountant. I don't know what's going on in my company. Now they have to know what's going on and they have to sign for it. But that hasn't changed in terms of what we've seen for ethical issues. And I don't talk about the 2008 financial crisis, but it didn't prevent that. You know, there were a lot of companies out there, banks, that were rolling securities in together, and they should have known that these securities were not offsetting each other's risk. Just because I have a good loan and I put it with a bad loan doesn't mean that that bad loan can't fail and my money can't be lost. So we had a lot of bodies that were involved in that, the credit rating agencies, most of the big banks, and we saw Lehman Brothers fail, and basically they're gambling with our money and then selling it back to us as though it was some no-risk thing.
Well, I think what they might be worthwhile comment is, I'm not sure we're gonna touch upon this later, but the industry does self-police itself pretty well. I mean, my wife is a public accountant, and we have to abide by its independence rules. And the independence rules are pretty crazy intense. Like, for example, we can't, when she works for RC Young, so that means we can't own any equity that RC1 audits, regardless if she's on a client or not, which is mostly great companies, mostly great, equities that we could own, so it really includes all that. I mean, we can't bank with companies or a bank that UI audits. We can't get our home mortgage in certain things. We can't get a car loan through certain things. So I mean, it's uber intense as far as how strict they are from an independence perspective.
Right, yeah, and it's needed to be, unfortunately, and that's been one of the things that I would say has been on the forefront of the AICPA and the other organizations as long as I've been an accountant. You know, every few years they're changing these things, they're updating these independence rules.
Right, but one last thing, but the point is that they're even stricter than any other profession.
Absolutely.
Listen to what's happening with judges, the Supreme Court even. So the type of rules we put upon ourselves are stricter than any other profession, and are they effective? Is it really worth it, is the question.
So unfortunately, we can't know what we don't know. If we didn't have these things, where would we be? I would say that you could probably look at the way crypto is going, and see if we weren't in companies in good places, then, there's millions of ways for them to try to steal your money with crypto. If we didn't have our companies protected, if we didn't sign on for those types of things, if we didn't have internal controls, then, that could be a problem that we would encounter.
So you keep saying, well, crypto's good, but there's a dude sitting, Bankman-Fried, sitting in jail because.
Oh, I'm not saying crypto's good. I'm actually saying it's the Wild West. And if you look at accounting you look at our structures, CPAs, IMAs, private companies, not-for-profits, we're doing a better job. Now, there's no question that the SEC is enforcing more. We're trying to do better on it. You may feel like we're doing all that we can, and that may be a valid answer because there's a certain group in society that no matter what you do, they're not going to behave ethically. And, so the only guardrails we have are the laws. And, I'm definitely not saying crypto is good. I'm saying it's the wild, wild west of ethics.
It's one of those buyers beware, right?
Buyer beware, and then try to avoid all of the other things out there where they're trying to steal from you. And right now, crypto doesn't have any level of protection. Even with banks that Zelle, right? Your bank will tell you if you Zelle somebody money, it's gone. It goes out in the atmosphere. That's different than what we have for credit cards. We have protections for that, right? But we are here because of the fact that we do our best to police ourselves. Now, like I said, we do our best, but sometimes the regulatory agencies come in and slap our hands and throw us in prison because it's not everybody. But we shouldn't think about it, and that's kind of the end of my message, is that we're failing. We're just looking for continuous improvement, looking to do better. And one of the things my PhD director used to tell me is he talked to a medical doctor and he kind of pushed down what we do. And he kind of said, we're not in the same boat as a medical doctor for what we do. And the medical doctor said to him, what if you could have prevented the Enron financial crisis?
Just said, what if they could have prevented the opioid crisis?
He was actually trying to pick him up though, but you're right, he was trying to pick him up and say that accountants do valuable work. If you could provide something that helped individuals invest and help them avoid those frauds, that we do make a difference, because how many lives were crushed when Enron went out of business? You know, what were they doing that really hurt their employees? Does anybody remember? Their pension, their pension was funded 100% with company stock. And they, towards the end, wouldn't let you sell that stock. So you might have looked like a paper millionaire for a while, but they locked you in and knew that paper was gonna be worthless. So, you know, it hurts people. We're working to strengthen ethics education. I teach in Texas. Texas has a very sturdy framework for accounting ethics. They require you to have an accounting ethics course if you're going to graduate with an accounting degree, undergrad. And they also require that to be taught by somebody who has the right ethics experience. Now you think, oh, that's no problem. Well, it creates all kinds of problems, because the business schools want to teach ethics as to a total group of students. But the mostly management, where that ethics comes from, doesn't get the approval from our Texas CPA Society. So we've got a situation where we have kind of business ethics and then accounting ethics, and they're kind of taught as two separate courses. So we merge them and everybody gets the full accounting ethics course. So it's changed. We're considered kind of leaders in that field, and we're working hard to make sure that accounting ethics is a part of every class, but also that, at least in Texas, they have a class on ethics. Now again, whether that changes things, I'm not sure. I do know there are some effective ways to teach ethics, and one is to kind of ask somebody, okay, read this, tell me how you feel about it, and then say, now take the other perspective, and have them try to justify the other perspective. Now, some people feel there's always a wrong and a right on ethics. I think there's kind of a floor where we all accept that it's wrong or right, and some people may be higher or lower than that. But for the most part, when I talk about ethics, I think of the collective. And so, as far as that's concerned, I try not to look at the individual as much. Now, there's also more focus on whistleblower reporting, and I talked a little bit about it. They've given out some pretty big awards. So you can, corporations are required to have whistleblower lines. I don't know how much has come through there versus how much has come through whistleblower.org, which is kind of feeds into the SEC. And then the SEC, if it finds it, will pay you. The thing I talk to my students about from ethics from the start is that if they find themselves in a situation early on in their career, they need to know what's going on, and they need to ask questions, because of these frauds, we've only recently started to get the top people. You mentioned the FTX fraud, and Bankman-Fried and his, girlfriend or wife, they're both prison time because of what they did. Back in the past, a lot of those executives were able to skip out on it because they said, I don't know what's going on. And the people that got hurt, people that got thrown in jail, were the whistleblowers and new employees, or not new, but lower level employees, because the first thing executives do is go, I didn't tell them to do that. They're the ones who did it. It's their fault. And so a lot of them kind of have to turn witness, but when they're doing that, they're also accepting some penalty for what they're doing, the part of the crime that took place. And the executives have millions and millions in lawyers to protect them, and the small people go to jail. So now this gives us the option, make some money and stop something that's wrong from happening. Corporate culture. There's been more focus recently on corporate culture and trying to push companies to do the right thing. And I don't know how successful it's been. We see that companies respond more to economic pressures than they do related to kind of investor motions. Because for the most part, when an investor brings up something, they want them to be more ethical, they want them to report more. We have very little leverage in that, right? Who owns most of the stock? Investment bank, executives at the company, hedge funds. Also, by the way, we own a lot of it in a different way, right? We now are having mostly 401k plans. Some of you may have pension plans, but either way, the investment people that work for our plan, bless you, are driving some of these not so great changes. What do you think they're telling the executives? Money, right? They want a bigger return. Before I got out of auditing, I audited universities, and they were making huge gains in their endowments, right? I was back when I was auditing, back when Harvard was around 15 billion. I think they're close to $54 billion now, and Texas, because their oil money is slightly behind them, and then you got Yale, and they're all multiple $billion. And those people are always pushing, do more, get more money, more returns. And so I think some of what we need to do as shareholders is find a way to influence the people that are making investments for us to do the right thing. And we've seen more activist type investors happening, but I still don't think that that's been enough to this point. So what are some of the positives? Increased awareness, stronger regulations, accounting organizations require ethical conduct, and technological advancements, right? So I've heard that in audits and in accounting now, because of the use of AI and technology, we can do things much faster. We can check thousands of things before that we would not have checked. So that technology should help us keep people on the straight and narrow. And it should help us in terms of being a deterrent to ethics crisis and making bad ethical decisions. You say, well, then why do you have a challenge over there at emerging technologies? Well, the technology goes fast, right? And regulators and everybody else is still kind of following up. AI is the hot new thing right now, and you want to be able to use it, you want to be able to incorporate it into your organizations. It can help you with training, it can help you with your work, it helps you with your decision making. I use it a lot of times to just create an outline for me so that I can get started on something, because it does a good job of helping me with art. I don't know that I trust, and I haven't yet trusted any of the references without actually looking at them. But if you use the right AI, they'll source it and you can immediately go check it. So that's important. But it is an emerging technology, and it is an area that's a problem. And I think we are going to have more responsibility in the crypto area going forward as well. So that's a challenge. The pressure to meet expectations is, of course, the oldest pressure of all times, right? Everybody wants another penny per share, 2 pennies per share out of you. If you got 20% ROI last year, they want it to be 25% this year. Well, that has put companies in a mindset that short-term success matters more than long-term goals. And that's a huge problem. We shouldn't be thinking about what's going to be best right now, but what is going to be best overall and kind of rolling. And you think about, or I think about that when I think about compensation. You know, and I don't wanna give away a little bit later, but compensation has changed so much for executives in the C-suite versus everybody else. How has company performance changed over the past 40 years? We're doing better, right? We're more efficient because of computers, because of robotics, manufacturing. Everything has kind of improved over those years, but there's still pressure to keep doing better and keep doing better. Complexity of business, that's kind of straightforward, right? We have to become experts based on the business that we're in. I don't claim to be an expert on everything in accounting. There is so much. Every industry has their own rules. There's a case here and it involves hospitals, and hospitals can function as a not-for-profit, but they can also function as a public company as well, and in some cases a public good. So there's lots of complexities going on now, overseas, international. One of the things when I worked at United Technologies was we had to look at all of our contracts very carefully with overseas companies, because bribery in those countries were legal, or was legal, excuse me. And so we had to make sure that the people on the ground in those countries weren't bribing people. Even though it was legal to do, it's not legal in the United States, so the SEC says, no, you can't do that. So we had to look at overseas contracts and to make sure that it wasn't going. Challenges in enforcement. So I talk about fraud, and there's something to do, you know, there's an enforcement mechanism when you commit fraud because you've broken the law. But when you make bad ethical decisions, if you didn't break the law, there's no way to enforce it. And so that's kind of the struggle. And also, let's think about, I'm gonna take a step out and just talk about the $1 million raffle for the vote. Right. So, I don't know if some of you heard it. There's a person out there that's offered a raffle. If you are a voter in a certain state and you're willing to sign up for this petition, you have the possibility of getting $1 million, and you automatically get $47, right? So they've constructed it in such a way that legally it can be possible. But ethically, what are you really doing there? You're buying votes, right? Which is extremely illegal. But our enforcement mechanism on that is potential jail time, but what really happens in the real world is somebody gets a $10,000 fine. And that's the likelihood of what's going to happen for most of these cases if you look at previous case law. So if I'm a billionaire, what's $10,000 to me? Somebody's got to tell me, I don't know.
Cost to do it.
What's the question?
Nothing.
What's $10,000 to a billionaire?
One flight on his big old jet. Not even.
It's pocket change, right? Probably gambling that on their golf game. I mean, so right now, our laws and regulations haven't really caught up. And even when we hit some company with a big fine, think about BP. You know, they just left that oil leak going because they didn't want to just cap it because there was still oil down there and they wanted to be able to use it. So instead of just getting down there and capping it and preventing some leak, it leaked much, much more. And so if I remember correctly, there was something along the lines of a $4 billion fine, right? Well, big deal. And even in that case, I believe they let them deduct some of that fine, which was super annoying to me. Because the IRS shouldn't let you deduct any fines or penalties, but the way it was structured, apparently, they got us to pay for some of it. And it's not big enough to make a difference, the fines. So, you know, if you're making $10 billion a quarter in profit, $4 billion is nothing. Our next question. What current ethical issues do you think the accounting industry should focus on? Give you another minute, see if we can maybe make it to 10. Appreciate everybody who's posting for us. All right, great. That's close enough. Compensation, CPA exam. So the CPA exam is interesting to me. I won't ask who said it, but I certainly would like feedback on that. The CPA exam has evolved in the last, I don't know, 5 to 10 years, a couple times. What would be some of the ways that we should focus on the CPA exam and help improve the ethics? So I know some states don't have an ethics portion of the CPA exam, and some states do. I was licensed in Massachusetts, and then when I wanted reciprocity in Connecticut, I had to take an ethics exam to get reciprocity in Connecticut. Cheating. So are we talking about at a university level?
Didn't one of the big four?
I was actually thinking of the EY, sorry.
Yeah, yeah,
The
same
EY
here.
scandal.
Yeah, I wrote it
Cheating
too.
on ethics exams.
Yeah.
Right, so we talked a little bit about that. We have somebody who has somebody connected to the firm. And, you know, it was a relatively small number of people from what I understand. I think,
I'd like to have more information on it. It was a large fine, but probably.
I think it was a few years ago, it just took a while to get to the press, and I think it was a number of people who were all let go, who were just trying to get the requirement done and cheating on the independence exam. Then the more recent one was, now they're, again, sometimes the pendulum goes one way too far, you know, there's a violation. So the most recent one is where people were taking multiple CPE at once.
right, yeah, so they were doing 2 trainings and they were arguing multiple monitors that they could do multitasking, but the company let them go anyways. And I don't think it was a huge number of people. I think it was under.
They fired them too.
Yeah, oh yeah, they let them go.
Which, to me, I mean, we're trained to multitask, right? I mean, everybody multitasks all the time, so because they're doing 2 CPs at once doesn't necessarily mean that was an ethics violation. They could have been doing both of them the right way.
Yeah, I don't necessarily disagree with you, although I don't know if they had it live where they were required to pay attention to something, then I would think that wouldn't be fair, but if it is a self-advanced video course, then it should work. One of the things that I have to do every year is kind of fill out these ethics things, fill out, excuse me, FERPA, which, I'm having a little brain cramp there, but I have to make sure that I know the rules to protect the student's information. I also have to make sure I'm following ethics. And the nice thing that they've done with our test is they've allowed us to take the test first before we have to do the training if we don't get 100 on the test. So the nice thing about it is that if you know this stuff, you can get through it. The bad thing about it is you can cheat on that test.
Yeah, one concept you haven't brought up yet is a lot of, I think the technical terminology was in appearance and fact. So a lot of what we do is to show the right appearance, because, you know, perception is everything. So that's kind of why some of these things are happening, where people are getting parted for doing 2 tests at once, even if they're doing both, because it's trying to get the right image out there.
Right. And so that's another thing when we think about independence. It's not just that you're independent in fact, but you're independent in appearance as well. And so that's why, even though you don't have anything to do with EMI other than the spouse working there, you still can invest in something or use the banks that they do.
Yeah, that's also true with that's also true with Enron, you know, with what happened to Arthur Anderson with Enron. I mean, they may not have even been guilty of doing anything wrong, but because of the appearance that they were involved, you know, perception became reality, and they couldn't audit it.
My
100,000
understanding
people lost their job.
was, yeah, I mean, it's terrible, and a lot of those people did not stay in the public accounting field. My understanding was is that really it came down to one charge for Anderson, and it was the behavior of one partner who said, shred evidence. And so that was the thing that was the illegal thing. Other than that, it may have been unethical, but it wasn't illegal until that point. And then once they got charged, then that all went away. And now I haven't followed up to see, did they arrest anybody for that, or did they do anything like that? And I think about 2008 financial crisis, and we think about how many people went to jail for that. Pretty much none, right? And I mean, that's the most ridiculous thing that I've ever heard, you know, but that's part of our enforcement issue problem as well.
How many hours for the CMA? How many hours a CPE do you have to have with the CMA? 30. And, you know, and the CPA is 40, and I will have to say, that does seem rather excessive.
Is it
40 hours a
Is it
year.
40 every two?
Every year.
It's
Every year.
different by state though, I think, isn't it? Mine's
Oh.
Ohio, and so for Ohio, it's 120 over 3 years.
Okay.
Yeah.
And
That's
a lot of
40 a year.
40.
Yeah.
And it was that in Missouri, and then they recently changed it to 40 annually.
Just for what it's worth, ours is you have to do 120, you can't do less than 20 in any given year, so you do 20, 20 and the rest.
So you have a 3-year cycle?
Yes.
Yeah, Massachusetts is a 2-year cycle, and within that, you've gotta have 4 credits in ethics, but the other stuff is, I think it's either 60 or 80 total, so it's
So
like 40.
compared to a lot of other professions, we are really heavy on it.
And, you know, hopefully it's what keeps us, you know, kind of with that good reputation, even though we're, you know, sometimes mistakes happen, there's a small group of people that, you know, aren't ethical. They can see that we're trying, we're doing our best, we're working with and cooperating with authorities. We still, like everybody said here, we still police ourselves to some extent, you know, and we just haven't gotten everything right.
And we're better than lawyers.
You're here.
I sometimes wonder about the ethics of CPE. I learn all the time, but it doesn't qualify towards 30 hours, and sometimes I watch a 1-hour webinar while I'm multitasking and barely care about what the topic is irrelevant. I'm just checking the box for those 30 hours, so sometimes I feel not great about checking those boxes, but that's what I gotta do.
It's a good thing you don't work for EY.
Huh?
It's a good thing you don't work for Ernst & Young if you're multitasking.
I'm not doing multiple CPE.
But see-
Reading emails and making sure I answer the prompt questions.
But you're learning at both, right?
You're essentially, though, doing more than what you're required, you're just not necessarily getting something that meets the CPE, which is, I don't know how all states work now, you know, Massachusetts went through a thing where if it wasn't given in a certain way, it doesn't have a certain code, then you can't get credit for it, so. Before, we could kind of do these things, then you get CPE credit, you know, you'd send in, you know, this is what I went to, and somebody would look at it and say, it's fine. Now, it's gotta be pre-approved, it's got a code that you gotta do, and so I don't know if all states have gone to that.
If I read GASB 96, it's highly relevant, highly educational, and worth nothing for CPE.
Right. But you're learning, and that's what matters. So, some of that from the 2 sort of large organizations, what are they kind of focused on recently? Non-compliance with laws and regulations, technology and data privacy considerations. Man, I would not want to get into that one. We here in the United States pretty much throw our data out there, and it's available for whoever. How many people were affected by the hack, the company down in Florida that used to do kind of credit ratings that went bankrupt. Nobody knows? No, this was actually a small little data company, and it wasn't one of the big ones. You wouldn't even know they had your data. But there was a recent thing where it's like billions of people were affected, and it was the first time that I had my social security number stolen. So there are a lot of times where health companies lost my health data, you know, and other companies lost, you know, my name, address, and phone number. But this one had my social security on it. So you guys might have seen, if you have a service, that something came up on the dark web for you. Take a look at it, because it might be your social security. So I put a fraud alert on my credit. I realize I'm not the first person that they're gonna go after, but I don't wanna be caught offhand. Independence rules in our interpretation, so if we go back, independence is one of the areas that you guys suggested. Even though they do so much, when I was part of the Big Four, the only thing I could invest in was this plain vanilla mutual fund, and it was all the clients that, you know, and everybody that they didn't invest in. So it was really like a kind of cash fund that mostly bought bonds, you know, from the government, right? 4% return each year.
Like you could buy Vanguard S&P 500 or something like that, because it might be in there.
No, you can't, it's up to your firm, if Vanguard was a client.
Well, like, I mean, S&P 500 probably ought to be one of those, but
Could you, well, like, for example, I can buy Fidelity, we have Fidelity and they might have S&P 500, so that's fine.
that's fine.
Right.
But it's
But
not
if
like
they
you can't go out and buy that individual company, but you can buy a fund that has that company in it.
Through the right mutual fund.
Through the correct.
Yeah, it really offers a lot of restrictions. You're going, and, you know, what you can buy is very, very limited, and a lot of the funds out there are interconnected, and we've seen companies just kind of grow and grow and grow, and you kind of monopolies. So you have GIA, Kraft, Fidelity, State Street Bank. There's not very many of them, and I know at PricewaterhouseCoopers we used to offer a lot of them, so our investments were plain. Investing in Robinhood or something like that was.
What's even crazier, not to be too personal, but I can't work for a company that EY audits. I can't be in a financial reporting capacity for a company that EY audits. Limits the companies I can work for.
I guess she has to. No.
Yes. We're gonna have to do something about this.
Hey, Paul, I've got a quick announcement real quick.
Sure.
I don't think she's in. Nancy Granados, they found something out in, somewhere on this floor that belongs to her, so make sure she's not in here. Nancy? Okay. Thank you.
No problem. Okay, so sustainability and corporate social responsibility, I've seen the SEC go after companies for their ESG reporting. I don't get involved too much in that area because it's kind of a whole new area of reporting. But they're making sure that what companies say, you know, that it's accurate. Guidance on emerging technologies and their ethical implications, so we've talked about those as well. So this is kind of a little fraud update with some numbers for you. First quarter of 2024, SEC filed 52 new actions. You can see that it kind of ramps up. 52 actions actually consistent with the past couple of years. And so they get more and more as kind of the year goes on. It's 784 in 2023, and in 2022, 760. $5 billion in financial revenues and $1 billion harmed investors. So this kind of answers your question. Some of that money that can be recovered can go back to the harmed investors. But I bet you if you look at the frauds, this money is probably a tenth, maybe less than that, of money that you're getting back. And for investors, you know, you talk to people that were kind of paid for Ponzi schemes, you know, they didn't get hardly any of their money back. So my next question is, what do you attribute the continued ethics failures and frauds post Sarbanes-Oxley? So what's continuing to drive some of these frauds? Some of these ethics issues? This one we have a little stronger feeling about. So this one's gonna be interesting to me because I've been thinking about a whole bunch of things that are kind of not related. All right, so we got the Gordon Gekko model, right? Was it Gordon Gekko what's that?
Greed is good.
Greed is good, right? Benchmarking, technology, morals. Compensation, pressure, and so all the things that kind of have been existing for a while. I'll ask you one question. What about FAS 95? If I remember correctly, and please correct me if I'm wrong, FAS 95 basically changed the way that the companies were allowed to report and use stock as compensation. And since then, we've seen more and more executives compensated with huge amounts of stock. If you're running a corporation and you've got stock in that corporation, or you've got stock options, or you've got restricted stock, what is your focus on? Is your focus really on shared risk? Is your focus on positive net present value projects like they say it's supposed to? No, the focus is 100% on the stock. And we know that this happened because early on we found a bunch of ways that companies tried to cheat it, right? If you gave stock to them at the strike price, they didn't record any expense and they didn't have to recognize it. So what would they do? They would backdate their grants, or they would, the way that they provided information would usually be around the grants. So they'd say, oh, something bad would happen, and then they'd award the grants while the stock price was low, and then they'd tell you something good, and it'd go right back up again. And so, to me, I think that's where we've kind of lost our ways on these big things. It is an absurd amount of money. And we've also allowed company CEOs to be chairman of the board. And in those companies, you see a lot more fraud that happens. And it's just a fact of the reporting. Why? Probably more scrutiny on them, but also, greed is a big factor as well. So I just wanted to kind of point out the timeline, and kind of where we are now. So it's funny, I have a textbook and it's got a picture and it says Sarbanes-Oxley, and then it says, fraud and misstatements, and it's, kind of draws a link and says, oh, they're all done, because Sarbanes-Oxley happened and internal controls got better. But what do we know about internal controls? We know internal controls can be defeated through collaboration. Right? They're not perfect. We have cost-benefit limitation on them as well. So we had the financial crisis, audit quality crisis, I call it. This is kind of my own term. In 2019, both the regulatory body in Europe and here in the United States really started to hammer down on firms and talk about the audit quality crisis. And one of the things out there was that almost 30%, if you look at the big four, of their audits that were examined by the PCAOB had audit deficiencies. that the PCAOB felt like they should not have been able to come to a conclusion that they came to because they did not perform the audit properly. And that's just the big four. And I won't hit on E&Y anymore, but they just got the unlucky pick in that particular year that I'm talking about, but it's been 20% over the last 5 years. And so I'm hoping what we see is as better technology comes about, that we'll start to see these go down. We'll start to see audits being performed better. And hopefully we can be helped, and I mean that by the faculty as well. Yes?
So how much of the audit deficiencies are driven by, the firms that do the audits don't usually have a very good understanding of the business they're auditing?
So that should not be the case with the big four, right? I can't answer that question for you. We have certainly seen that at smaller firms in the United States, but I don't know the answer of what percentage, but I would think the big four could not use that excuse at all.
Does anyone have any comment about that?
Yeah, I would certainly be interested to hear what you think.
What?
We're the big four these days.
KPMG, Deloitte, PricewaterhouseCoopers, and Ernst & Young.
So how much time of your audit are you having to spend kind of training the auditors on how your business works or being understanding?
I just think sometimes I worry that they're not asking the right questions because they don't understand the businesses that they're trying to audit. And so, and I wonder if anyone else has experienced that. I mean,
It sounds like an interesting question, and I apologize, I don't know the answer. You know, I didn't dig into all the reasons that they,
and maybe that's not
that
the
they're
point,
audit deficiencies.
maybe that's not the point of the audit even.
Right.
Or,
I know in terms of,
It gets better after multiple years of the same auditor, but it gets worse as they have a shifting rotation of their team.
yeah, that could
Because you
be,
can only have, what, the same auditor for 2 years and then they gotta switch, or is it 5?
no, same partner for 5 years, and then
The partner switches every 5
you can
years.
still stay with the firm, but you have to.
And in Europe, they have more strict rules where the whole firm has to leave it for so many years. I forget how many years that is. They're trying to implement that in the US, but they haven't had that passed. So Paul, well, it's an interesting question too, is for how many years have the audit firms even been tested? It only came about with the PCAOB, right? Before
Yes.
the PCAOB, there was no check of the audit quality.
Well, there was, right, in order to do, sorry, what do they call it, assurance work, you have to be checked by your peers, so.
Oh, yeah, peer review.
The peer review was the thing before the PCAOB jumped in, and I'll be honest, I don't remember the
The PCAOB came around as part of Sarbanes-Oxley, didn't it?
Yes. Yes.
So that's been around since 2002. But just recently, I think that it's also a matter of who is managing the PCAOB. And so that kind of changed by administration, I think. So
It does.
This last administration's been much stricter with audit quality than what's before. So that's kind of why it's made more headlines here recently.
Yeah, absolutely, and that's another thing, I mean, if you're changing the SEC and their focus, and I know when the new SEC director came in, his focus was more on kind of the crypto issues, and so the crypto now felt like they were really getting squished, and before that, they may have been a little more relaxed. Politics makes a difference, the political culture and the political environment can be a cause of that as well.
Well, Vicki, I would guess that part of it is the auditors that you're working with are just taking the work program, the audit program that they're given, going through and asking questions based on the audit program, so it really, I guess it would depend on, maybe I mean, they probably got a pretty standard audit program for
yes, probably.
whatever industry you're in, and then maybe they need to tweak it, and they don't.
Well, and I think it's also, I worked at Deloitte right out of college, so you got people who are very inexperienced, right? A lot of people left after 3-4 years, so you don't have people
say don't do exactly what you've done in the prior year, but if you don't have a lot of experience, you're gonna look at, oh, you did what did you have a question or you asked me, you're gonna continue to do the same thing. You're not gonna really challenge a lot of the audit program.
Thank you for sharing. It's so nice to have a little discussion here and talk about these because as professionals, we're so diverse in terms of our activities that it's great to hear from other perspectives. Even within the Big Four, they probably do things a little bit different. We had, where I was at PricewaterhouseCoopers, the senior was kind of in charge for setting up the audit plan. And so we had like a check the box. Does this company have this? Does this company have this? Does this company have that? And it kind of allowed us to select the audit procedures from there.
The team is made up of mixed level. Those that are experienced and inexperienced. It all depends what role you play in.
I gotta grab two more copies along the way. So I would like your answer to this, but I want to start talking about the cases. And we have about a half an hour left, so I kind of figured 5 or 10 minutes per case. And so these are little one-pagers from cases that I normally do. I got some coming for them. Yes, I gave you both the same one because I thought, well, if you'd like to keep it, you can keep it. And then if you have some comments for me, you can write them on it and give it to me. Any comments you feel free to give anonymously, so you can write down on there. Or you can put your name on it, and especially if you want to have me email you, hopefully when I get the cases completed, then you can let me know. And then these are some other things. These are kind of the way that when I asked our students, these are kind of the questions that I asked them. And again, if you feel comfortable and you want to share your feedback with me, I would appreciate it. Required. It's optional, absolutely. Absolutely optional. You do not have to, and you do not have to put your name on it if you decide to put any recommendations. I'm gonna pass on another one, but I'm gonna ask you not to turn this one over yet, because I kind of want to get dual reaction for you on this, from this one. it, don't turn it over. Don't look at the back of the second one. Do you feel like that's enough time to kind of look it over? Okay. So, I won't go through every question with you. Obviously, your feedback is important, so anything you want to share. My question coming from the sheet there would be, if you look at number 2, do you feel like there were ethical issues there? Okay.
Number 2.
Question number 2 on the sheet here.
I don't have
Oh,
questions.
sorry. My apologies. And again, these are just strictly volunteer. If you want to share it with me, any information will just help me work with the cases. I'm hoping that I pulled these from things that you may have encountered or you might encounter in the future. These are hypothetical. Or came from someone's career who wanted it. But this was a particular one I talked about, the hospital. You have temporarily restricted funds in the hospital, and when this person went into work and audited that area, they found that doctors were withholding some of those funds. And a lot of times the doctors were withholding them not for things that one would think that they would want. You know, it was a party for their staff at Christmas, those types of things. But there were also some other expenses. You know, they worried, could I get a machine next year? Well, those records, this person felt like, would sort of, should be kept separate. If doctors have funds that are available to them, those records should be kept separate. If the doctors had enough cancer research to meet the temporary restriction, it should have been pushed through. And this person felt like in the audit that we're new auditors, why would we leave all this kind of money to be manipulated by management and doctors in the first year of our audit? Why not clean it up and get it fixed? So, what do you think some of the alternatives could be here? If you were that staff person, what advice would you give to them?
Cash is coming in for the company, the hospital.
So I write a gift and I write a check and I say for Dr. Adams to use for cancer research. And so there's kind of 2 or 3 types of gifts. There's one that's a gift that's just unencumbered.
Yeah.
And it says it can go to anywhere. And then the 3rd type of gift is a corpus restricted gift, and it's fully restricted and becomes part of your endowment, and you can use the
Are they not
investment.
insurance?
So what's the?
So, right, they're taking this in,
They're putting it in their bank.
they're putting it in their bank and they're running it through, they're not saving this extra cash aside as like a restricted cash to these doctors. But they are, you know, they're not recognizing.
Not in the P and L.
Okay, so they're keeping it on the balance sheet, but.
Right, and-
As an agreement.
And they can, you know, at their, once the restrictions are met, they can add.
You're supposed to recognize the revenue at that point, so you have this restricted gift, and then once you have expenses, if that doctor Adams had cancer research expenditures, you're supposed to recognize it as revenue.
Yeah, but what are they, they're debiting cash, or what are they crediting them? The original.
It's gift,
balance.
it'll be temporarily restricted gift revenue.
So I think the issue is that it's all landing on the balance sheet,
Okay.
even though in the term, they should be showing revenue on the
Yeah,
P&L.
okay.
So I'm sure it is still showing up as it would be a credit to revenue, so instead it's sitting somewhere in the liabilities, right? But the key is that it's not appearing in the period when it should under GAAP, right?
It's not a liability.
And the
Right.
ethical,
Yeah, okay.
the ethical question is whether or not it should be, we're leaving it on the balance sheet, or leaving it there to use later, so they put their performance
Yeah.
targets.
Okay.
Yeah.
All right.
The CEO gets a bonus because the hospital didn't hit a certain bottom line or whatever, and, you know, for me, it's not, when it said it's not in compliance with GAAP, then right there's your answer. For me, well, I would be reporting this, right? I get that, you know, he thinks it's not material, but still.
I think it's really
There's a
interesting too, to
private-
talk about materiality, because it's almost like, well, if it's not material, but your auditor can just figure out what it is, right? If Lynn Swanson, in her first year as senior, was able to prepare this schedule of this is what it should be for this year and last year, well, then it must not be that big of a lift, why not just do it the correct way? You know?
So what would you recommend that person do? That person who finds themselves in the ethical dilemma?
If I were in that person's shoes, I'd be having a conversation again with Ingalls, whoever it is from the hospital, to talk about, I think you should do it this way, for these reasons, here it is, and then we just don't have to worry about it, then it's done, it's fixed. Right.
And you would hope that the doctors would be on board and understanding that there's some cash available for them to do what they've got to do, but your revenue should be recognized. There shouldn't be a reason why we're holding up revenue, especially at a state hospital. You know, why do they have a kitty? Who's gonna make sure that the doctors are doing this right?
But the cumulative effect is material.
Yes.
Yeah, and so to adjust for that, would it be a appropriate adjustment?
I would think so. When you come in, it would be one of the things that your auditor could kind of step in and say, this is the practice. Their argument was, this is what we do in this industry, and that's okay.
Then, yeah, but in terms of materiality, if it's accumulated, and that the accumulated correction is material,
Right.
then that seems to answer that materiality question too.
And so are you guys familiar kind of what our regulated bodies recommend when we do, when we find ourselves in an ethical situation? So make sure that you understand, so it's not like, ask questions, find out that you definitely got the right answer. That's the first part, right? So make sure that you can frame it in a way, and then it's talk to your supervisor. If your supervisor you feel like is not addressing the question, you go to the next supervisor or whistleblower hotline if it's a small company or whatever you think you can. And then of course you get to the point where if it continues, then you've got to think about, should I contact a lawyer and should I quit?
Sorry, Dan, what exactly is the ethical dilemma here? Who's in the tough spot?
Well, I feel like the auditor is in a tough spot because they feel different than what their manager feels, and their manager said, don't worry about it.
So the ethical dilemma is a matter of materiality, because we know it's wrong, it's a violation of GAAP if we didn't report the revenue on the P&L. So So I mean, that's black and white, so that's the dilemma is the fact that her manager told her not to do anything about it.
Right.
Firm is one thing, they keep this client.
Yes.
And so that's not accounting, that's business related. And so you've got two ethical dilemmas, because let's say that it was the perfect world and you were being paid by a third party to do the audit on the hospital.
Right.
And then your duty is to the third party to do that and GAAP. And so they're saying, well, maybe you should report it because we don't care about the importance of your client. We want the audit. That's
So you're saying this is why the IRS doesn't have these problems.
That's correct.
Yes.
I mean, to a
It's the
great
biggest challenge
extent.
because public accounting is asked to audit these companies who are paying them.
100% of the problem. And it's been a dilemma for a long time.
Yeah, so it's a good problem for the auditors to have, but it's still a problem.
So Dan, you really hit on what, you know, the dilemma is for accounting, materiality. And then, in my world, it's always the assumption of value as to, you know, how much is that piece of real estate worth? A market, lower market or cost? You know, what's the value of obsolescent, slow-moving inventory? Those things that don't necessarily carry the value on the balance sheet, but are there. And, you know, and how much have they built up? I mean, if we're off a little bit on, you know, what our estimate is on, you know, a reserve, for whatever reason, warranty or whatever, if we're off a little bit, that's okay. But if the materiality is huge and we miss that, then we've misstated our statements. And at what point in time do we recognize that?
Well, what interesting point you're making too is it's really interesting when you consider what is really ethical and what isn't. Because a lot of our accounting rules may not necessarily be, you know, perfectly correct all the time. Like take leasing, for example. I mean, how many years did we go through and not have leases on our balance sheet as an asset? That was trillions and trillions of dollars when we finally made that decision to put it on the balance sheet. So was it ethically wrong that we never presented the balance sheet with that asset obligation before? So there's a difference between, you know, the black and white of what the code says, you know, what's an actual violation or not.
And that's kind of a problem in our code, but we're not prescriptive to the point where, I mean, we have thousands of rules and thousands of things that have gone into in letters, but those are kind of each question being asked because we've had this framework for years, but there's still things that you can't.
But didn't it become an ethical dilemma when people started abusing it? Right, when people, you know, it's like, hey, I'm gonna roll up this and put all this debt and stuff off balance sheet on some shell company somewhere to make my consolidated balance sheet look so much better. And
It's interesting, it's all shades of gray, right, which is why we're here.
which is when it became, oh, well, we better do something about this, right?
It's
Because
usually-
what Enron did, you know, what Enron did was perfectly legal at the time. They were just so brazen about it that, you know, one guy had to pay a price.
Yeah. It was a misuse of professional judgment. And the GAAP gives you room to make choices. We don't work within like a mathematical bright line. But somebody says, oh, we can pull this off balance sheet. And we sort of have a little room in GAAP to be able to use some judgment. And our judgment here is good. And,
So I want to jump to the next case, I hope you don't mind, I really appreciate
I wanna
the
add one
conversation,
more
go ahead.
One other thing is the difference between our money and watching somebody else's money. That's the ethic in my view. I think I'm the guy that's trying to watch other people's money.
And that kind of wonders, like, CPAs don't expressly say that they're fiduciaries, right?
you know, we avoid that judiciously.
Right. And accountants don't, but that's something that can be thought about.
Well, the auditors, in their statement, in the station, they correct in all the material aspects. So for the present year, it was deemed immaterial. So what we do going forward is increase their substantive testing for the to make sure that it continues to be an immaterial item.
Okay, so
And whenever you increase substantive testing, you increase the cost of the audit.
Yes. And nobody wants to pay more.
Right.
So I got the other tax case there for you, if you just take a couple minutes. I know we're getting right to the end here. So just ask you some similar questions about that. By the way, I wanted to also, these are my sources for this presentation. If you want specific links and everything, please email me and I will be more than happy to share the specific links to any of these for you. Or even if you want the presentation. So you can obviously skip the third one, and I didn't get to it today. Wasn't sure how much time we take in conversing, but if you gave me feedback on the other two, I would appreciate it. I'm gonna try to get you guys out of here on time, so hopefully you've had enough time to read that. Do we feel like there's an ethical issue here?
Oh, definitely.
I don't do taxes, but I wouldn't touch it.
Has anybody here ever done taxes for small business or personal?
All the time.
Is this something that is in the realm of possibilities?
Yep, sure.
Yeah. So this is something that happens. How do you respond when it happens to you? And I don't mean the situation where your manager is telling you to do something different, but when the client comes up and tells you, well, let's see where the other stuff comes out first. I mean, it made me nervous because I was the VITA coordinator and I had a bunch of students doing tax returns. So, you know, when somebody comes in and you're there kind of one document at a time, all right, we're good there, let's do this one next. Yeah, what's going on here? Happens a little less because those taxes are a lot less complicated, but sometimes people want to make a certain mark and they're like, well, the IRS figured it out. So what does this person do?
No, I'm not gonna do it that way.
Right, I mean, you really have to stand up to the client, unfortunately, and tell them we're not gonna do it that way, right? And that makes it tough, because it does put you at risk for your job.
Well, you just, you know, and the issue there is turning around on the client saying, you know, I can't get this done in time and you have a penalty if you don't do it right. It is, you basically refuse to do it and put the onus on them.
So have you ever had a client that you knew were that they didn't, wasn't as brazen as this, where they said,
There, it was many, many years ago, I remember doing a return and he would have the same receipt in multiple packages, like it's part of this expense and I'd see the same receipt and oh, like it's meals and it's this deduction. You know, it's like, wait a minute, this isn't right. I don't remember how I reacted at that point, but I just kind of remember, yeah, this guy's trying to pull a fast one.
You know, and it's interesting too, because I feel like the culture around taxes is avoidance, but not only avoidance to the point of avoidance, it's get away with whatever you can get away with. And one of the challenges you mentioned is with valuations. You know, out there, are you using an independent, reliable party? Are you trying to do it yourself? You know, so there's, I think, a lot of challenges out there with taxes. But
Avoidance is legal, evasion is illegal.
And for corporations, that line is pretty gray, right? Throw it out there, see what they do, see how they respond to it. The thing about IRS is whether or not they're gonna catch you.
You give advice based on whether.
Well, obviously there's a problem, because a box of receipts with no documentation or story behind it, it's inappropriate.
Well,
You're supposed to make association of the receipts to business transactions. Have it documented, the dates, purpose of the meeting, you know, who was attending, what was discussed. None of it is stated in here, it's just a bunch of receipts. I could have gone out, you know, with a family member, whatnot, and then.
and unfortunately, that's kind of what, some clients will bring you this stuff.
Yeah.
And will treat it like business. Yeah, unfortunately, they don't do a great job of documenting that stuff. It just happens, but you're right.
Well, the problem is that you need to be proactive, and if you agree to work with somebody, you need to let them know what the procedure is.
Well, I appreciate you guys. The one thing I didn't get to talk about today that I wanted to talk about, and thank you for doing the surveys, is I just wanted to make sure that I talked about avoiding ethical dilemmas. We have more information about companies now than ever. So you can kind of start from the time that you're potentially going to be hired at that company by just looking at what does the applications, what does the, what does the ad say for the job, right? If that ad is completely focused on goals, 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 and it's got those trigger words in there, you know, then you might want to avoid that company, or at least do a lot of investigating about them. You know, avoiding ethical dilemmas is best when you're choosing your employer. And after that, it's very tough to do. So I wanted to thank you for today. There have been some surveys completed, I appreciate it. If you guys don't mind sharing anything with me, if you want to just drop that off up here, and you guys are free for the next one.
Yep.